Hi, everyone. Welcome to this episode of Claims Never Sleep. I'm your host, Megan Henry, and I will be joined by my co-host, Jen Cap, shortly. She's not here at the moment, but she's coming in. But our guest today is Dionna Chambers. And Dionna Chambers is Director of Claims at a insurance company that services a lot of the southeastern states. And we're here to talk about some of the things she's experienced through her career, and some of the particular specifics about insuring properties in like Florida, that there's been a lot of legislative changes and the challenges with that, and just general challenges that she's seeing and she's seen over the years with social inflation and nuclear verdicts. So with that, let's bring her in.
This is the Claims Never Sleep podcast, presented by Cruiser Mitchell, with your host, Megan Henry.
Good morning, Dionna. Welcome to this episode of Claims Never Sleep. How are you today?
I'm great. Thank you.
I'm so happy to have you, and I'm so happy Jen's back to join me. Jen's been a more frequent co-host on these podcasts, and I'm happy she keeps coming for more.
Yeah, I'm glad that the Maycember of my children's crazy lives have subsided, and I could join you again.
Yeah, well, soon be you're going to have summer, though, and that's its own animal, though, too. As you need to hop off this a little bit early to go pick up a kid from summer camp, which, by the way, my kids are still in school. So I was like, she's already in summer camp? Like, we have 2 more weeks of school left.
Oh, I'm jealous. Very jealous.
Well, as I ask everyone who comes on this program, we're here to talk about claims and all things adjacent to claims. And our guests are often, like yourself, director of claims or attorneys, or claims adjusters, whatever it may be. But everyone kind of has gotten to this area of their life in a different path. I have yet to find someone who had a direct path into claims, and even a very rarely direct path into the legal world too. There's a lot of bobbing and weaving that happens. So I'm curious, like, what was your, what was your journey into claims? Was it a linear journey, or are you like everybody else that you kind of just fell into this?
I think I kind of fell into it. I have a degree in communications, which I always say I can do everything and I can do nothing, right? Because it's at the time it seemed a little bit of a generic degree, because then I graduated with my bachelor's and I thought, well, now what do I do? I went into sales for 5 minutes, right, for a very brief period of my time or of my life. And my brother-in-law actually worked in insurance, and he talked to me about a job in claims. And he said, look, these established companies where he was working, they're great. They value their employees. It's a great job. You're helping people. And he had worked in the industry at that time, I think, for about 6 years. He was in management, and he really kind of sold me on attempting to get into claims. And I did. Several interviews later, I was hired and never left.
And what kept you in the industry?
Oh gosh. So first and foremost, it really is a way to help people, right? People only come to me because something bad has happened, and so there's some validation in getting to say, this person has experienced a very bad time or one of the worst times in their lives, and I have an opportunity to help them navigate the difficulty of a claim and alleviate their pain or the grief with their property claim or something in some way. And so I get personal validation from that. I've stayed because the job itself is interesting and challenging. And now I've been in the industry a long time, and stuff crosses my desk every day that I've never seen before. Mm-hmm. And although it can be mentally exhausting, I am really invigorated by that, and the continual learning and different things that you see. Sometimes I wish I wasn't. Right? You think, boy, I'd like an easy day at work today, and but I do love a challenge. So
Yeah, it's funny. Like Jen and I were actually having a similar conversation, I think last night about, some days, as much as like I love that, this job is so mentally stimulating, some days I wouldn't mind not being stimulated.
yes, yes, right.
Like, I'm not here to complain about it, but some days I just want to turn it off a little bit.
Yeah, and I think also I'm like I guess what they call an extroverted introvert. No one believes me when I say I'm an introvert. I really am. I'm not a phone talker. My husband might call me for an issue, and I'll be like, and then cut him off. But there's just something about claims and about that giving or mentally giving that I really enjoy, and then I want to go home and not speak to anyone.
I think it's interesting because so many times people make the insurance company out to be like the big bad person. Whereas in reality, you're saying, and for those of us who have worked in insurance, we're really there to just help people and to make them whole from whatever their loss is. So it's just always interesting to hear it from a different perspective.
Yeah,
absolutely. And I also think that, as a director of claims, it's my responsibility to remind my employees that you are here to help people and to really set the culture. And that's the way I learned the industry. But you're right. We have a bad reputation. Public perception of insurance is really never great. But we still have to, persevere through the negativity, I guess.
and like, where do you think that negative outlook comes from? Because I hear that a lot. Like when I obviously talk to a lot of people in insurance and in claims, and that is always the general sentiment that, oh, like the claimants and plaintiffs just think like the insurance companies are just out to cheat them or not pay them enough, and that is not the sentiment in the industry itself. So I wonder if it's coming from the plaintiffs bar trying to create that negative energy or the negative feelings against the insurance industry, when in fact, I mean, I will say I have not yet to speak with anyone on the insurance side that's like, oh no, we don't want to pay.
Right, absolutely. In fact, I think many companies say, we want to pay what we owe and not one penny less, right? Mm-hmm. We want to pay what we owe. We occasionally, we might and sometimes do pay more, in fact, than the insurance company thinks they might owe. But I do agree with you. And I don't want to disparage anyone, but I do think insurance is a business, and the plaintiff's bar, it's a business, right? Mm-hmm. They're driving customers in their door. Culture right now, especially, we really have this culture of punishment or cancel culture. In the industry, they call it social inflation, mm-hmm. Where you really want to, I guess, choose the little guy, for example, over someone who might have a lot of insurance. So I think there are challenges. Everybody's seen the commercials. You may be entitled. Mm-hmm. And so I do think that sometimes that can have or play a big factor in the perception of the industry. And it's something that we have to deal with and find ways to overcome.
Yeah. And I don't know how we get there besides kind of doing what's already happening. Like I don't see on the industry side, the insurance industry doing anything wrong, right? Like certainly not over, you don't want to have this perception that you're going to overpay on claims, but exactly what you're saying, that like, we want to pay what it's worth and not a penny less, right? You're trying to make people whole. But I do think there's a information out there or the messaging out there that, especially with the excess verdicts and nuclear verdicts that, well, there's always more, there's more, and I think that's creating an issue and making it harder.
I absolutely agree. I think that in the industry, for example, we may learn that regardless of an issue that is being litigated, a Hurricane Irma claim, for example, just may not be winnable in a specific venue. So we might say, Meghan Henry purchased a policy of insurance with us, but she specifically said on her policy that she doesn't want her pool cage included because it's a low cost, it's old, or whatever.
Yeah.
And maybe when it gets hit by a hurricane and she finds out that not just social inflation, but inflation has now caused that pool cage to be super expensive. Now we're in suit over the pool cage. She may not remember that she chose for it to not be insured. And a jury in that venue, who also may be suffering their own hurricane losses, says, you're darn right, Meghan deserves to have that covered. And so that can be an unintended cost to, everyone's personal feelings about something that you would think is very clear. Here's Meghan's signature saying she doesn't want something covered, but the jury says, she was a victim of a hurricane, she deserves to have it covered. So it's the public perception. I also think, and I don't know what you guys think about this, but I think there is an element of, I'm going to think of the word, I even wrote it down so I wouldn't forget, product market fit. And so we have an insurance product that's been pretty regulated and it's been pretty much the same, absent a few disruptors in the industry for years and years and years, right? But the market wants something else. The market thinks that their return on investment or the product that they want to purchase should include every kind of loss. And so they don't understand that it doesn't. So we have a product that we're selling that doesn't actually meet what the public thinks they should be allowed to purchase. And that can cause problems as well.
Yeah. Sometimes I wonder, though, I was thinking about this actually just yesterday. Like when an individual goes to purchase new homeowners insurance, because we're talking about property claims here, I do feel like the general public might be a little underinformed about how it all works and what sorts of policies and riders they should be having, because I think like those types of surprises all happen frequently, that they might have a policy and something happens to their property and they find out, oh wait, this wasn't included in my policy. And I don't think there's any fault to be blamed any way or another. I just think there's just maybe an under education as to how insurance policies work, and the general or the average individual just might not get it. I mean, let's face it, insurance policies are a little confusing to read. That's why, there's whole coverage departments for firms to interpret said policies, So I do think purchasing insurance might be confusing for, I think, some people. Like you might not know what you need or what you should have. And I think a lot of that might fall on the broker to explain what you should need or what you should have, depending on where you live.
I agree. It can be such a huge burden on brokers and agents, especially agents who aren't captive agents, because they might have 10 different products from 10 different companies, and they may not always understand what makes company A a better fit for Meghan or Jen as opposed to company B. And you're right. Experts in the industry disagree on how to interpret certain parts of a policy. Legislatures, courts disagree about how to interpret certain parts of a policy. And so it is very difficult. We all understand that it's legalese because it has to be legalese. I can't just say, hey, Jen, if you get house damage from a hurricane, it's covered. right? I have to put in very specifically how those provisions are covered, because too broad could mean something that we don't intend for it to mean. So,
yeah.
And I think it's even confusing, as you said, for the brokers and the agents. Friends of mine have a captive company with a larger insurer, and one of them called me the other day and she said, "Can I ask you a hypothetical question?" And she went off asking about coverage, and my answer was the most famous lawyer answer in the entire world of, "It depends."
It depends, right? Right. Right. I mean, we can speak in generalities, but the truth is it depends. And so if we have agents who call us and they say, "Hey, I have a question about X," the answer is it depends. I can go over the policy provision with you, but the best way to determine if something is covered is when an insured suffers a loss, report the claim.
Mm-hmm.
Report the claim with all of the facts, let the insurer do their investigation and apply policy provisions and go from there. That's really the only way to know, because every single claim is different, even if it looks like it isn't on its surface.
Yeah. Yeah. And so let's back up a little bit though. So, because usually we got into the meat of things before we finished talking about you, and and I don't want to put the cart before the horse, even though we already kind of did. But anyway, so you get into the insurance industry, you never look back. But how was your path to where you are now? Because I mean, right now, you're pretty much at the top of the totem pole, so to speak. So what was your path there?
So I started, and I think this is par for the course for most insurance carriers. Claims can be difficult to learn, so they start you in maybe what is considered the easiest type of claim. So I started in auto claims, property damage, parked and unoccupied, theft, things where there isn't going to be a third party involved or liability involved. And then I worked my way up into two vehicle accidents or multi-vehicle accidents. And then you work into injury claims. I happened to start my career in Ohio. And at the time, Ohio had very complex court case history, so case law history and legislative history. And so we actually established uninsured motorist units, and that's all that we did. And so I kind of graduated up to uninsured motorist in Ohio, where there was significant litigation, and we barely were able to investigate or apply policies per the contract, per the policy. We actually had to say, okay, when did this happen? What Senate bill was in? Was there case law? Because as you guys know, and the public most likely doesn't know, once the Supreme Court in Ohio or any state can come in and say, well, the legislature intended to say this or for this outcome when they passed House Bill 1 or Senate Bill 1. This is what their intent was. And then the legislature would come back and go, no, that's not actually what we intended a year later, and they pass a different law. And so the Supreme Court, makes a decision, and it can go back for all time, potentially. The legislature passes something, and depending on how it's passed, if it's procedural or not, it can say from this day forward, we intend for you to handle claims this way. So I graduated to that. That was very complex in Ohio. I transferred to Florida with the company that I was with and learned about Florida claims. Now, you guys in the industry may be aware of this, but Florida is one of the most complex venues.
Yes.
And so I had a lot to learn. And but I still kind of did the same path. I came as an injury claim rep and then graduated, in those roles. So you start as a claim rep, maybe you go to a claim specialist. I became a claim trainer, and I trained across the country in several different venues. So I had multiple licenses. I went to another company into claim management and graduated there. And now I'm the director of claims at a third company. So I've had 3 companies in my career that I've worked with.
So let's talk a little bit about Florida, though, because you and I chatted about it on the phone. I've talked about it on this podcast before, but Florida is just going through a lot, right? As for claims and litigation. So, what has been your experience in the changes in Florida as to, insurance coverage and claims and legislation? Like there's been a lot going on in the last, I would say, 3 years, right?
Yeah. And in fact, I think you can really go back even further than that. But for, to be relevant, for example, a lot of people don't realize this, but Florida, let's see, in 2022, Florida had maybe 15% of nationwide homeowners claims. So of all the homeowners claims across the country, Florida made up 15% of them, but they made up 71% of the litigation. And as that was in 2022, as a result of that, or as a result of actually several years where Florida made up like 60% or more of the litigation, our legislature enacted tort reform that was effective in March 2023. And that made some changes that, depending on where you sit, you may perceive as positive or negative. Ultimately, the changes that they've made through tort reform will make us much more similar to the rest of the industry and is designed to bring down some of that litigation. So,
yeah. And have you seen that happening yet, or is it a little bit still of the status quo?
It is starting to happen. It takes a little time to work those claims out of the industry. So in the 2 weeks prior to tort reform being enacted, so it would have been the 2 weeks prior to March 24th, 2023, I forget the number, I would have to Google it, but there was a significant increase, like a 700% increase in the amount of lawsuits filed in Florida. And that goes back to that timing thing. They wanted to get in, if the legislature was passing tort reform and it was going to be designed to be, from this date forward, from March 24th forward, they wanted to get their lawsuits in prior to things changing. And so there was a giant increase in lawsuits, and they're just now starting to kind of work their way through the system a little over a year later. And insurance companies are in the position where they can, we're starting to really resolve those, and the impact of the litigation continues to go down.
And this is something I wonder, like Jen and I don't practice in Florida. We have the benefit, or I would say the pleasure of often practicing in Philadelphia, which is its own animal. But the courts, that sort of influx of litigation, that had to flood the court system to the extent that things probably couldn't even move. Like, that's just such a large volume of cases coming in. Like, how did the courts handle it? Especially
absolutely.
Coming off of COVID, though, too, that things were already kind of in a trickle backup. Like, we're still digging out of that. So how is that?
Yeah, you are absolutely correct. Some venues instituted an order where 100% of the cases were stayed automatically. And that's not necessarily a bad thing. That because of the way tort reform drove, fear into the hearts of perhaps the plaintiff bar. If they had an accident that happened the week before tort reform, some attorneys deemed the best way to protect their client's future recovery was to file suit immediately. And so we wouldn't know anything about a case. And so some of the venues instituted an immediate stay, which really allowed insurers and plaintiff attorneys to get together and go, okay, this is what it's about, and let's see if we can negotiate a resolution. But it is, it is just, it's very difficult. That some venues brought judges out of retirement to assist, understandably so, because it was just such a significant amount of litigation for everyone.
Yeah. And, where is it now? Are they like working through it? Are we still in a backlog?
We're still in a backlog in some areas. And of course, on any docket, as industry insiders know, anytime you get a calendar call, they're trying to work the oldest cases first, right? So the judges are really trying to get those in front of a jury when it's appropriate and possible. And so they're working on the oldest cases first. Having said that, there can be many old cases in the system that get continued. I'm not buying or selling or saying that that's a problem, because many times it's appropriate for whatever reason for it to get continued. But we have to work through the old cases first in order to get to those newer cases. Every venue in Florida, to my recollection, requires a mediation prior to trial. They've started implementing hybrid mediation and non-binding arbitrations. So if a mediator can't resolve it at the mediation, they take all of the evidence that was presented and review it, and a couple weeks later have a judgment for a non-binding arbitration. So they've instituted that as well.
Yeah. That certainly is going to help push things forward. However, you hear, at least I hear on our end, about I think there's some plaintiffs firms that are certainly taking advantage of the landscape and taking some strong positions, I would say, as to how litigation should be handled. I'm not going to name any names, but there certainly have been some messages out there from some larger, well-known national plaintiffs firms.
And again, not to name names, but like you, there are certain things that I never saw in the industry before, and I never thought that I would see. And one of those things is Florida bar actions against attorneys, and several of them are being suspended way more than in my past, going back to 2005 in the state of Florida. It was very few and far between, and there's a lot more of it now. And I'm certainly not making a comment on any firm, and I'm not, again, buying or selling whether that's right or wrong. It just is a fact of the way litigation is going in Florida today. There's significant more action from the Florida bar.
And have you you're not just in Florida. Well, we'll make that clear too. Like you but Florida is just of an interest. But I think when you and I talked, though, you had mentioned that there's some other jurisdictions that you are in that are almost as problematic as Florida to you, and like kind of are giving you some agita, I should say.
Yes, great word for it. Yeah. So the company that I'm with now is kind of in the Southeast, and I remember when I was interviewing and when I was hired here, and we were talking about the products and where we sell them, and most of our business is in Texas, Louisiana, Florida, maybe a little bit of Georgia, North Carolina, and South Carolina. And again, for people in the industry, other than Pennsylvania and Philadelphia, many people will look at that and go, okay, if I had to name the states in the top 10 worst place to, or most difficult place to handle claims, those would be in the top 10. And here's a perfect example for what can make claim handling difficult in some of those venues. In Florida, as a result of tort reform, they instituted what I'm going to call truth in medical billing, right? In some of those other venues I just named, there is still no truth in medical billing. And so to put it in a public perspective, if I go to the doctor today and I'm insured with any large health insurer, and my doctor charges my health insurer $500 for my appointment, and then maybe my health insurer pays $450 and my co-insurance or my deductible or whatever is $50. That's it. Everybody's paid. My insurer paid. Dionna paid, and so it's done. And then if I have to use that medical bill in a lawsuit for a premises liability or an auto accident, it shows up as Dr. Whoever charged $500. Some of those venues that don't have truth in billing, that doctor's office can say, well, you know what? I don't have a contract because this is due to premises liability or an auto accident. And so now I'm going to charge Dionna $1,500 for the same service that her health insurer paid. And I agreed to, $500 total for. And so what might be $10,000 in medical bills in Florida turns into 50,000 medical bills for the same treatment in South Carolina, for example. And so that is some of the things that make some of those other venues also very difficult. And it can be a hard concept for the public to understand.
I mean, that's impossible. It makes it makes your resolution numbers so much higher if it just automatically litigation has a higher cost.
Right? Absolutely.
And then it also, incentivizes doctors to work with plaintiffs firms because they conceivably can make more money just by partnering up or being a frequent treating facility that, because I didn't know that.
That's absolutely correct. Yeah, that is absolutely correct. And they may treat under what is called a letter of protection, which basically is a letter that the plaintiff attorney will give to that doctor and say, hey, look, when we resolve this claim, I recognize you have a lien and I'm going to make sure I give you some money out of whatever, judgment or whatever settlement we agree. Now, afterwards, they still might go to my doctor and say, look, we knew you would take $10,000 for this before. Will you take $10,000 or $12,000 now? So a jury might think that they have to pay those $50,000 of Dionna's medical bills, when in reality, they'll award $50,000, but that doctor accepts $12,000 for it. And none of that actually gets in front of a jury.
But it just runs up the boardable costs.
Absolutely.
So then a jury is going to see these boardable costs that are astronomically higher than what it would be if it weren't in litigation.
Right. And so it really becomes a dance sometimes between defense attorneys and plaintiff attorneys and the judges and what information is a jury allowed to hear. And I will say that juries do tend to be pretty savvy, especially now with inflation and people really understanding inflation and cost and medical bills and how everything has affected their wallet. And so if you can get the correct information in front of a jury where they can make a determination what they think should be right about the medical bills, juries typically are going to come out with an appropriate amount that compensates a doctor and protects Dionna without awarding amounts that are so extravagant that everyone's premiums go up.
Yeah, but we all know that as savvy as a jury can be, they're also very unpredictable.
Right. Yeah. Well, this is a perfect example, and I will tell you that this is an example of something similar to a real claim, but I would never, share information from a real claim. I want to protect everybody's privacy.
It's a hypothetical, if you will.
It is a hypothetical. It is a hypothetical, but you might have a situation either in not an auto accident where an accident actually occurred or premises liability, but an a situation where, let's say, I have an interaction with Jen, and I feel like Jen really wronged me, and let's say she cut me off in traffic, and we didn't actually have an auto accident, but afterwards, Jen and I get out and have a verbal altercation, and the jury really likes me, but they don't like Jen. They might, and I file suit, they might actually award me money because Jen was absolutely so wrong. And then your insurance company pays that. It's not even an auto accident, but your insurance company, took that, helped you take it to trial, and they said, look, there's no way that a jury is going to award this because as egregious as Jen and Deonna's interaction was, there's no auto accident. And so there's nothing that's covered by insurance, right? Yeah. There's no way that they're going to do that, but a jury does because they really don't like Jen. And so now all of a sudden an insurance company might be paying $100,000 on an interaction where they should have never paid anything. They should have only paid zero. And so that's that social inflation or that punishment culture.
Yeah.
That's crazy. I mean, how is the insuring clause even triggered on something like that? Like picking up coverage.
Right. And I would say, again, hypothetically, it's not, but what is triggered is the duty to defend. And so your insurance policy, every insurance policy does two things. It says, we will pay, right? So you experience a loss, we will pay. And then under these certain circumstances, right? But the other thing that we will do is we will defend you in a lawsuit. And that duty to defend is much broader than the duty to pay. And so sometimes insurance companies find themselves in a situation where they're defending Jen from this action that Deonna started, and they think everyone's going to confirm that they have no duty to pay. There's no way any insurance policy ever covers or would pay for Jen's actions in this loss. But then a jury says, well, Jen was so mean, or we didn't like her so much, or whatever, that we are going to give Deonna $100,000.
Jen is pretty mean.
I'm like, in my mind, all I'm picturing is like after like an Eagles game gets out in Philadelphia and people trying to like drive through center like on the side of the road.
Right.
But what are the damages though? That's what I get. What, like, hurt feelings from an argument? Like, I mean, I know we're talking about a hypothetical situation here, but in that scenario, if there's not even an accident and there's no actual negligent infliction of emotional distress through the argument, like,
yeah, I'm very intimidating. I mean, I can see it happening.
Well, and you know what, Megan, you hit the nail on the head. That negligent infliction of emotional distress, because some venues say that in order for Deonna to be awarded any money for Jen's infliction of emotional distress, that I also have to have an injury. But some venues say I don't.
Wow.
Well, I don't like those venues.
On that note, I do have to run and get my children. That's a very interesting place to end.
Don't get any arguments on the way.
And
right? I mean,
cannot wait.
That's a full different conversation. That's another conversation, right? That's a complete separate podcast on that kind of stuff.
Yes, it is. Well, I cannot wait to listen to the end of this. It was lovely to meet you.
Thanks, Jen.
Drive safe. So, but going back to that, where are you seeing that, like, those sorts of claims more often? Because to me, if I were in your shoes, or someone on your team or me as an attorney get that lawsuit, I'd be like, what a load of BS this is, you know? Because even like
Yeah.
that negligent infliction of emotional distress, generally, like it's like, okay, so what are your damages? Like hurt feelings. Okay, so do you go to therapy afterwards? Like, did you have post-traumatic stress disorder? Like it's also very hard to quantify, you know, and especially if you're coming out of
Yes.
one interaction, right? If you say it's one interaction, not over time, like a bullying type situation, like it's one interaction. So like, what are your real damages that we're trying to compensate for here? And I guess you can go to one of those doctors and they can, they can bill up the wazoo. I don't know. So enlighten me here.
Yes. Yeah. Well, I think you're exactly right. And you know, maybe I write in my diary once a week, or maybe I tell people about it and they're called to testify and go, oh, I remember when that happened because Dionna literally had, you know, 5 rough days at work because she was still so upset about it. And so the damages can also become kind of nebulous. And plaintiff attorneys have gotten very savvy about how they present those damages. And again, it kind of circles back to that cancel culture or punishment culture or the social inflation where we talk about you have been wronged and you should be paid money because you were wronged. Now, maybe you should be paid money because you were wronged, but it doesn't mean insurance should pay for it.
Right.
And so that circles back into that whole education piece or the product market fit. You know, people think I've had a loss and insurance should protect me for this, when in reality, they really don't understand what policies say or what they should cover, or sometimes a jury, depending on the circumstances, it may not affect their decision about whether the insurance policy should pay.
Yeah. I mean, I think that goes to the core of what what you started off saying, is that, you know, the entitlement feeling that's out there. I mean, I think even if you're taking it away from even physical damages, like property damages, like going back to the enclosure around the pool, like, yes, it sucks. Your house, you were in a hurricane and you had some physical damage, but maybe you didn't have the appropriate coverage. And just because you have a homeowner's policy doesn't necessarily mean your homeowner's policy covers every single thing to your home, especially if you're in a hurricane or a flood area. Like, did you have the extra coverage for these other things? But then there's this entitlement again. It's the entitlement feeling that, well,
right,
you know.
Right. Oh, and you know, and to be clear, I'm not even saying that we should have a change in culture.
Mm-hmm.
But what I am saying is, if we choose to have this culture, then the product has to keep up with it, and you have to pay the premiums that are associated with that true risk.
Mm-hmm.
And so it becomes very difficult to underwrite. And of course, no one wants to pay more premiums because they think that they only get a return on investment if they make a claim. And that's not actually why insurance exists, right? Insurance exists to protect your assets in the event of a loss, and your return on investment might be peace of mind. And it might not actually be a claim payout, right? But it's got that, insurance has a bad reputation, it's a necessary evil. And then we have this culture where we are awarding things in more situations, and that's okay as long as you allow the product to keep up with it. So now we know that Jen is a really difficult person and she has lots of altercations, right? And so as a company, as an insurance company, I should be able to look at that information and go, okay, we're still going to insure Jen, but because we've paid out one loss a year because she has a bad attitude or she gets in these altercations, I should be allowed to raise her premiums to make sure that it is consistent and protects the rest of our policyholder group, so that we as a company don't become insolvent because we just have to keep paying out for Jen's altercations.
Yeah. I mean, I do think it sometimes gets forgotten that insurance is still a business, right? Like,
right.
And it's a for-profit business. So, and not that the insurance companies are trying to not that they're trying to overextend or overdo so they're just making profit, but like you have to keep the bottom line in mind, because if you're paying out on Jen's claims and not reassessing Jen's policy and maybe raising her premiums, then like you said, other insureds or the company can suffer. So you need to now Jen's more of a risk, or now your home is more of a risk. Like, look, you might have flood insurance and your home keeps flooding and you keep making claims for these flood claims. We're going to need to reevaluate your premiums, because clearly we're having to pay out on floods often in your home.
Absolutely. And insurance companies are for-profit companies, which people may not like. On the other hand, you might be investing in insurance companies and you may not even know it. But I am insured with a mutual insurer, which means that I own that insurance company, right? So I certainly want them to be profitable. And if Jen is poor Jen, right? I feel like I'm dragging her down. Hypothetically,
she could take it,
right? If Jen is on our book of business and she's causing my premiums to go up, I want to talk to my carrier and go, hey, look, I own you also. And I want to talk about your underwriting standards, because I think we need to lose Jen. We need to send her somewhere else because she's clearly, dragging our profits down and causing my premiums to go up. And so even reciprocal insurers, some people have never even heard those terms, but they've been around for 150 years. And that means basically your customers or your subscribers, your policyholders, own the company. And so if you are insured with one of them, you are directly affected by their profitability and by their underwriting standards, and by what they're able to charge for premiums. And if they get a nuclear verdict or even an unexpected verdict, like in the situation where an auto insurance carrier has to pay out even when there's no auto accident, like that hypothetical that I talked about, you're affected by those premiums, or by those payouts. And I think we had discussed this between you and I the other day, that who does a jury think actually pays for this, right? Wow. You're not actually going to punish the company. You're going to punish the policyholders, because their premiums have to go up in order for the insurer to remain solvent and provide coverage for everyone.
Yeah. And, it's funny that I'm glad you bring that up, because it is something that I think about is, when you go to trial, you're not, it's at least in my jurisdictions, if you mention insurance, it's like an automatic mistrial, right? The jury's not supposed to know that insurance is behind it.
Right.
Do you really think jurors don't know? Like, I always think about this, because maybe they don't. Maybe I'm just too in the industry, but I think the general public understands that when you have a motor vehicle accident, or you have property damage claim, or you have an injury, that there is insurance behind it. But
I totally agree with you. And that kind of goes back to the things that, statements where people think jurors perhaps are uneducated, or they are not very sophisticated. And that is false. That is absolutely false. I think that juries can be very sophisticated and they understand most people are likely insured because because I know the state of Florida requires it. I bet the state of Pennsylvania requires it, right? And so I do agree with you that even though you're not allowed to mention it, that the assumption is there.
Yeah. I mean, and so I remember I had a trial, my very first like solo trial. I happened to be like 8 months pregnant at the time, and I thought that was going to help. It didn't.
Right.
But the award, there was something that I forget exactly what had happened at the trial, but there was something that mentioned that I think reminded the jurors, oh wait, there's insurance behind here, and the reward they gave was directly reflective of like a standard insurance policy. Like they award, like, because in their mind they're like, okay, I have insurance, okay, what is my car insurance? My car insurance is X and I'm covered for X, so they gave X, and it was and that wasn't even a number that had been out there. It had no correlation to any of the damages. It was clearly like, yes, someone in that room or someone had discussed like, there's insurance, we're just going to give basically what we believe would be the policy limits of that individual coverage.
Right. Yep. I know that happens many places, and like we said, I mean, juries, in my opinion, are more sophisticated than they get credit for.
Yeah. Yes. But I think part of the reason sometimes they don't get as much credit as they should is because of a lot of these excess verdicts. Because I think there's that idea or perception out there that juries are hearing all these other nuclear verdicts and using that to fuel what is seemingly normal, and that's kind of where a lot of these giant verdicts are coming from, because you hear they hear about it, like, and that it seems like, oh well, a jury in this jurisdiction awarded $2 billion for this. Well, why can't we do it here?
Right, absolutely. And again, it can go back to that whole idea of punishment, that we think that this person or this insurance company especially needs to be punished for this, forgetting that they're the ones who are going to be paying for that. In order to pay a $50 million verdict or whatever this nuclear verdict might be, the company is going to adjust premiums, and so you, who are also insured with that company, are going to be paying for that in your premiums. So,
yeah. So, and one thing I changing gears slightly, but one thing I wanted to ask you about too is, like during all these changes in Florida, you did hear a lot about other insurance companies like pulling out of the state. So, yours was not one of them. I presuming,
right.
as you were still there. But I mean, that must have been a difficult landscape too, as a leader at an organization. You're seeing other companies being like, "Oh, we're not dealing with Florida anymore. We're pulling out." Like that there must have been some trepidation internally about staying put.
Yeah. So,
and not that I want you to give away talk about anything that you're not supposed to talk about, but
no. I mean, property insurance in Florida has always been a challenge, right? And it's because no matter what algorithms people put in place to try to quantify what's going to happen in the future, you can only get so close to accurate. And with hurricanes and other storms, it makes it very difficult. Well, another thing that has been difficult for Florida is that if Meghan's house, for example, had a roof that needed to be replaced 5 years ago, but now you have a loss and we need to replace the roof again, the cost of your roof has most likely doubled. We might have been able to put a $25,000 or a $30,000 roof on Meghan's house in 2019, and in 2024 that is going to cost us $50,000, maybe $60,000.
Yeah.
And the rising cost of inflation and other challenges in the Florida market has made that something that you can't really predict. You know what we can predict? We can predict a shortage of plywood during hurricane season, right?
Right.
But we know that plywood's going to come back, and we also know that if we get a hurricane in Florida, Texas is driving some plywood over, Georgia's driving some down, Philadelphia is gonna drive some down. So we know that it's out there to get that elsewhere. But there are things that happen in the insurance market alone that make it difficult to quantify, just like the replacement cost of roofs. And not to make it all sound bad, there are some market innovations that happen because of challenging markets. And so, Florida has probably seen its share of market innovations in response to that. For example, I might have a house that's paid off. Maybe my house is worth $300,000, but I don't have a mortgage on it, so I'm not required to have insurance. I might decide to have insurance anyway because I don't have $300,000 to come up with if my house sustains a total loss. But maybe I don't want to insure everything. And so in Florida, some carriers have some policies where you are allowed to limit the amount of indemnity you might get for roof damage. Okay, my roof is 15 years old. I know within the next 5 years I'm replacing it no matter what. I'm assuming it's going to cost me 40 or 50,000. So I'm already preparing for that. So maybe I choose to drop that roof coverage off or reduce it in under a certain policy. There are some carriers who have innovatively made changes to their policy where you can do that, and then that thereby reduces premiums. So there is some market innovation that happens in result to the challenges here. But like you mentioned earlier, a lot of carriers, they don't even have to become insolvent to decide to leave the market in Florida. They can just go, it's not profitable enough. There's too much risk. And so we're out. And so they stop writing insurance here.
I would say I would not advise people to not have insurance on their homes, even if they're paid off. Just my 2 cents.
Right.
You never know what could happen.
Right. That is exactly right. I totally agree with you. I agree with you. And that's why we say it's a design to protect your assets, right? Because you have a $300,000 asset and now you have to replace it tomorrow. That means you have to come up with $300,000. It's not like you have to do it necessarily over the course of several years. And now you have interest rates that are super high. So if you have to take out a mortgage to do it, it can be much more prohibitive for people.
Yeah, for sure. So one thing I wanted to bring up before we close up, and has nothing to do with insurance, but to do with Florida. What is with all the sharks this week? What is
Do you know what? So there have been a lot of shark attacks, right? There really have been. And you see it in the news a lot. But I will say this. Working in insurance, a good friend of mine who became an adjuster and has worked in the industry for several years, he started his career out of college as a St. Pete Beach police officer. And in fact, I have 2 friends who did this. And one of these people used to be in a helicopter that would fly over like Clearwater Beach or St. Pete Beach, right? They're patrolling by a helicopter. And he used to make the joke. He said, you could look down and people had no idea there are sharks everywhere. Mm-hmm. They're like literally just swarming around and they're everywhere. So, never forget, just like alligators, just, I will say as a point of preference for myself, I will likely never step a toe into fresh water or brackish water in the state of Florida because I have a fear of alligators and they are everywhere.
Yes,
sharks are the same way. I mean, they're literally everywhere.
I know. Well, and that's the thing, like, this is totally off topic, but I couldn't help it because I'm like, I was seeing all these things this week, but I mean, you have to presume that, yes, the sharks are always in the water. But they generally aren't out to attack people. Like, I know it's happened, but like, they're not, I mean, they're obviously they're hunters, they're looking for food, but they're not. I think the human shark attacks are rare, and when they do happen, there's some extenuating circumstance. Like I mean, I certainly don't want to go swimming with the sharks,
Right.
but
Right.
I'm much more fearful, honestly, of an alligator, I think, than being in the water with a shark.
Right. I'm not a fan of either one, which is funny because I'm, literally live in a state where I'm surrounded by this stuff. But yeah, I'm sure that it has something to do with the temperature of the water and time of the year
Yeah.
and currents and stuff like that. I'm sure, and then the amount of people that are in the water because again, tourism is up. It was down for several years because of COVID and stuff like that, and tourism is back up. So I'm sure that there are factors like that.
I don't
But
know.
yeah.
There was one video I saw of like this shark going after this bird that was like on, and like it was just like it was the stupid bird. I was like, just fly up. Like it kept flying low to the water. The shark kept trying to get it, and meanwhile, I'm like, kudos to whoever videotaped this thing. But I was like, the birds needs to fly up. It was fascinating. I'd never seen anything like it. It was, a lot of activity on TikTok this week, and
Yeah. Right.
Around
they're everywhere.
Area 30, whatever it's called, like that area near where Panama City, I think, where all the
right. I think between Destin and yes, beautiful places, absolutely beautiful places, and I'm sure that they don't have any more sharks than anywhere else along our coastline, but yeah, it's scary.
Well, anyway, just to close up a little bit. So, I ask this of all my guests who come on, knowing what you know now and where you are now in your career, what advice would you give to your younger self?
I guess one of the things that I would say is remember to always be sympathetic, right? I always think that I was, but I do think that when you're new in the industry, you might have the opportunity to get caught up in the details, but you always have to remember that there's a person on the other side of the details. And so remain sympathetic and remember the person on the other side of the details, and be patient because learning will come. But having said that, you will never know everything there is to know, like I said, there's stuff that crosses my desk that I've never seen before. And sometimes it's just like, oh my gosh, like, are you serious? I've never seen anything like this before. And so just to, be a consistent learner, and not worry about not knowing everything because, industry knowledge will come. And when something crosses your desk and you don't understand it, then you seek input. You seek input from defense counsel, from maybe people who have been experienced in those situations. There's usually an answer.
Yeah. Well, I think that is great advice. And I mean, also it is what keeps us in this industry too. It's just that, there is something new every day. And sometimes it makes you a little uncomfortable. Like, you get something like, oh, I don't know this. Like, all right, now I got to figure it out. But that's also what makes it interesting too.
I used to joke that after I had been in the industry for about 4 years, and I was still in my 20s, I was still very young. But I remember thinking back to when I first started at the very first insurance company I was with and thinking, my gosh, I was stupid. Like, I didn't know anything. I thought I knew, and I thought I was doing stuff correctly. But you think back and you're like, oh my gosh, well, what a bad decision. Or you could have done this better on whatever claim, right? And so, and that's one of the reasons the industry starts people slowly, and provides a lot of oversight to make sure you're handling stuff correctly. But I really think that it took me at least 4 years to feel like, okay, I have a level of confidence, that I can answer some of the questions that come my way, or I know where to go to answer the questions that come my way.
Well, and that is, I think the key point is knowing what the questions are and knowing where you can go try to get them answered if you can't do it yourself. Right. Knowing your resources, right?
Absolutely. And I love it. I mean, I wouldn't change it for the world. I remember, every day I remind myself that you're helping people, and knock on wood, there are not always a lot of people who have catastrophic circumstances with their claims, and those are fewer and farther between. But being in an industry this long, I guess I'm proud of the fact that I still maintain a very large level of empathy or sympathy, and remember that customers need your help, and they need your understanding, and sometimes your explanations. So
yeah, absolutely. Well, thank you so much for joining me. And of course, to everyone listening, if you like what you hear, please like and subscribe to Claims Never Sleep. You can find us on your favorite streaming platform. You can also find us on YouTube at Claims Never Sleep Podcast. Thanks for tuning in.
This is the Claims Never Sleep Podcast, presented by Cruiser